$80 locked in on SPX, $140 locked in on Russell. Neither trade could lose from this point onwards, and one of them went on to make $930. Two breakouts, two transformations, and two completely different shapes. Here's why they end up different and what matters. Both the S&P and the Russell gave standard breakout setups, which the software highlighted good setups as usual. SPX came up as a bull trade graded half size, and the lazy stack eventually gave a 5 out of 6 to give some extra confidence through the trade. Basically, it means that 91% of the time of this particular day, we're expecting the market to close higher than the open. Russell came up bull as well, it graded better. We had a plus size trade on this one, so we're going to increase our position size. Eventually, we get at least 6 out of 6 on the scoring, which locks in after the first hour. It gives us a little bit more confidence on the day. Two breakouts, two bullish green lights, nothing exotic about either of them. And what we don't know with any benefit of hindsight is what the day's going to do. We've got to play the trades, play the odds, and manage the trades as we see them. So both trades went on their usual way, standard credit spreads to initiate, with a view to transforming them once they've moved in the money. Then the day did something it doesn't normally do that often. It trended, put in a really good straight line trend, average day's move, and it didn't really stop to think about it too much. Now that matters a little bit more than it sounds, because a credit spread doesn't really care whether it moves fast or slow, it just needs to not be wrong rather than to be directionally right. But a transformation trade, it does make a difference if we get that directional move, because it means that we can lock things in a little bit quicker. So the speed and the strength of the move decides what we can transform this into. Again, normally we'd look at transforming it into a butterfly. From the Russell, we were able to transform it into something just a little bit. So the S&P moved strong, it settled and meandered sideways, and that let the credit spread transform as normal into a butterfly. Wings $5 apart and a guaranteed profit along the way. With a nice tight profit tense, and eventually it settled, which we'll talk about in a moment. On the Russell though, it moved faster and stronger, and it didn't look anywhere close to just a lazy settling type of movement. Basically what I was able to do, instead of creating a butterfly, I can still add the debit spread part of the trade, but not turning it into a butterfly. So we get this really wide flat top profit tent, so we've got this basically larger zone to lock in profits. The profile looks a little bit more like an iron condor essentially. And again, once those transformations are in place, the worst case scenario is that we make a profit. That's it. Just a case of how much profit at this point. So the S&P, which was what we've got on the screen, and we've pretty much followed that to the close. $80 was locked in as the guaranteed floor. Can't get any worse than that. Land the bullseye at $75.10, got up to $1,080, and this is just with one contract. Now on S&P, we did land inside the bullseye, and eventually we closed for $930. And again, I left a little bit of meat on the bone, certainly on the minimum profit floor side of things. This managed it slightly. I was doing a few things and I lost my eye for the ball. Nonetheless, it's still a guaranteed minimum profit. And again, it's a lovely bonus to land at the bullseye, or at least close to the bullseye, and get in the profit tent on this particular occasion. The Russell came close, but close isn't good enough. The strong trending day continued to be strong trending all day, basically. And I would have needed around about 30-40% retracements on the day, which it wasn't looking like doing. But if it had happened, we had a nice wide profit window if it had happened. So the whole point of the exercise, and instead of transforming these trades, we're going to lock the profit in. And as we can see on today's case, it means that we have the opportunity to land the bullseye or in the profit tent and turn a small profit into a very large profit with absolutely zero risk at all. And it wasn't just me that actually made some money today. We had some, the community is winning alongside me. It's a repeatable process that we can do. Mary took 75%, Duncan took 60% of max profits and 50% max profit. Bill did well also, 50% max profit. James had the lazy popper win before the closing bell as well. Paul closed the SPX trade at 50% return. And again, we can see these wins on the screen. It's not a case of, oh, it's just me because I've been doing so while. Like, this is a repeatable mechanical process that new and experienced traders can profit from. So if you want to learn how to collect morning income like this from breakouts and then get their risk-free before lunchtime, the premium popper system is maybe for you. Click the link next to the description or in the description on the video, and I'll see you on the other side.